Dear viewers, in this video you will know the top best Indian companies for long term. I am Prasenjit Paul, author of the best-selling book How to Avoid Loss and Earn Consistently in the Stock Market, which is also the highest rated book on stock market written by any Indian author. And I am also actively investing in the stock market since 2010 and achieved financial freedom. So let's start. The first stock in our list is Asian Paints. The company is market leader and fastest growing paint company in India. The company's fundamental is very strong, which is evident from the last 5 years debt to equity ratio of 0.09 and return on equity of more than 25%. In the last 5 years, the profit of the company increased by a whopping 94%. The interesting fact is, despite slowdown in the real estate market after 2010, 12, 13, from 2010 to 18, 19, there was a slowdown in the real estate and in the housing market. Despite the slowdown in real estate segment, the paint demand actually increased, and despite that period, despite the adverse period, Asian Paints actually improved its performance in every parameter, be it sales, profit, improving balance sheet and all. The most interesting part, in the last 20 years, not a single investor lost money investing in Asian Paints at any time and holding for 2 years, be it at any time. You can consider at the peak of the bull market, be at 2008 bull market peak, or any time. If an investor invested in Asian Paints even at the 2008 peak bull market and hold the share for the next 2 years, then also he ended up with profit. So that's the characteristics of such high quality, strong, fundamentally strong stock. In the last 5 years, the stock price generated a whopping 175% return. Obviously, you can't compare such stocks price performance over the last 1 month, 3 months or 6 months, because for a truly great companies, a strong, fundamentally strong companies, you need to consider the price performance for the 2, 3, 4, 5 years. So if you have an investment horizon 2, 3, 4, 5 years, not the just 1, 2, 3, 4 months, then you might get the reward. Another point is, see, as per regulatory norms, I can't directly comment on buy or sell because that's not as per the regulatory norms. In fact, the fact is that you are investing your own money. If you will be in profit, that will be completely own profit. So nobody can force you to invest in any kind of stock. So similarly, whatever the stocks that I am going to share in this video, these are for the general discussion purpose, not any buy sell recommendation. I'll share some most important, the brightest point. Now after that, obviously it's your decision. So don't expect I can directly say buy this, sell this, or target price this. In fact, nobody can force you to buy or sell any stock, as it is your own demat account, your own money. Profit will be all yours. The second stock in our list is Divi's Lab. Divi's Lab is the largest API player in India. Not only that, it is one of the top 4 largest API player across the world. Almost all major pharma companies across the world rely on Divi's Lab for their medicines. You might ask, what is this API? See, in very simple terms, API is the raw material that is used to produce medicine. So Divi's Lab is obviously a market leader and largest player in API. In the last 5 years, profit after tax jumped by 61%. The company is fundamentally also very strong, as it is evident from the last 5 years debt to equity ratio of only 0.01% and average return on equity is more than 19%. In fact, the company is virtually debt-free company and the very strong balance sheet, and the company is generating huge cash flow year after year from the API business, and also they are expanding their manufacturing capabilities. Most importantly, if you look at the last 5 years financial performance, you will find consistent growth in sales number along with a very stable operating margin, which implies a strong moat, a strong competitive advantage of a company. In the last 5 years, the stock price generated 255% return. So again, so this is the company that you can't compare price of the 1 month, 2 month, 3 month, 6 month performance. Obviously, you need to consider 2, 3, 4 years viewpoint. Before moving forward for the third stock, a very small announcement that if you want similar kind of videos free of cost in the upcoming days, you must have to increase the viewers of this video. How to do that? Simply share this video as many times as you can via WhatsApp, Facebook and all. You know, until and unless a video has enough viewers and a channel has enough subscribers, you will find no YouTube channel can keep posting free videos without enough viewers and subscribers, right? So it's in your hand how to increase the viewers of this video. The very simple thing is, you can pause this video right now and share it as many times as you can through WhatsApp, Facebook, Twitter or whatever you wish. The third stock in our list is HDFC Life Insurance. The company is one of the fast growing player in the private life insurance space. In the last 5 years, the profit after tax of the company jumped by 65%. The fundamentals of the company is very strong, which is evident from the last 5 years return on equity is more than 22% and the debt-free balance sheet. Increasing financial literacy and still the lower penetration of insurance is offering huge growth opportunity in the life insurance segment. See, in India still, like in US and in developed nations, the life insurance penetration is huge, but in India it's still low, and nowadays a lot of younger generation is moving forward to the YouTubes, and also a lot of financial literacy is on the increasing trend. This is why the growth of this insurance sector, mainly on the private insurance sector, is great and the outlook is bright. Talking about the stock price, since after listing in November 2017, the stock price generated 100% return. Before moving forward for the fourth stock, another small announcement that recently I have launched the YouTube membership program, wherein I keep share the stock of the month and also my personal multi-bagger stock portfolio under the YouTube membership program. If you are interested, you can select on the join button and check out all the membership levels. This recent stock that I have shared on the February 2020 is doing well despite the volatility in the market, and the best part of the membership is there is only monthly commitment. It means you will charge for the 1 month, and if you don't like it, you can cancel the membership at any point of time. The fourth stock in our list is HDFC Bank. HDFC Bank is one of the fastest growing bank in a private segment, and that's a very well reputed bank, has a very clean history. In the last 5 years, the profit after tax increased by 154%. Fundamentally also, that's a very strong bank, as it is evident from the last 5 years ROE, average ROE of kind of 16%, and the NPA level of is only 0.35%, which is much lower than the maximum public sector banks. The bank displayed very consistent growth across all economic cycle, be it the market boom or be it the market up cycle and down cycle, in every period. Another interesting point is, again, in the last 15 years, if you look at the last 15 years price chart, not a single investor lost money in HDFC Bank investing at any point of time and holding the share for at least 2 years. Despite the so many ups and downs in the market, if you invest, like if you invested in HDFC Bank share at any point of time and hold it for the 2 years, you didn't suffer loss, you ended up with the profit. And in the last 5 years, the stock price generated 190% return. That's also a great return. The next stock in our list is Nestle India. You know, Nestle India is a very attractive company because the company is a market leader in instant noodles, instant pasta. You know, the instant noodle brands Maggi, pasta also the Maggi, and also the instant cereal segment. The interesting part is, wherever Nestle is present, they are either the market leader or the second biggest company in their own segment. So wherever they are, they have a very dominant market position, and they are known for quality and consistency. In the last 5 years, the profit after tax of the company improved by 270%. The company is fundamentally very strong. In fact, it's a textbook example of a very fundamentally strong company, and fundamental parameters are the best that whatever the companies I have talked till now. The last 5 years average debt to equity ratio is 0, so it's virtually debt free company, and return on equity is a huge 63%, approx 63% kind of. Across the every economic cycle, be it up cycle, down cycle, the company displayed very consistent performance, primarily because of the reasons, because their brands are the household names. You know, the Maggi brand, and you know, for the infant baby food products, the milk product, they are the very, household name and known for a quality product. In the last 5 years, the stock price generated a whopping return of 190%. So these are my top companies for long term in Indian stock market. Obviously, I can directly comment on the buy sell because that's against the regulatory norms. Obviously, the buying selling decision is completely all yours. Now, if you want this kind of free videos that I must release in the upcoming days, the simple thing you need to do is you need to share this video as many times as possible across your all the WhatsApp contact list and Facebook list and all, because unless the enough views, I'm telling again, unless the enough views, I can't publish similar kind of videos in the upcoming days. I hope you already subscribed to the channel and also shared this video among your friends and all. Also, make sure to put your comment in the comment box, like sharing your feedback, whether I should publish similar type of videos or whatever the feedback you wish to share with me, you can put it in the comment box. That's it as on today. Stay tuned and happy investing.